Welcome to my video. I'll trust you'll find it helpful and informative. Please remember to like and subscribe. Thank you.
Now, let's start by doing the pay as earn for, I forgot what the Z, Zain. Okay, let's look at Zain. So now we are going to say, we are going to calculate Zain. Okay. So what do we know? We know when we calculate his pay as, let me just call him ZM.
C, it's Charles or something.
No, it was Zain. I remember it's a Z. Okay, so let's calculate his now. When we calculate his pay as you earn due, we must use his pay as you earn remuneration. So now we say, we take his pay as you earn remuneration to start with. Okay. Then we say that we are going to multiply that with 13. Remember?
Yeah.
Because we said that he gets a 13th check. Okay. Then when we multiply it by 13, we get a total of 199,307.68.
I am confused. CN is the company car, not Zain. Yeah. CN is the company car. Zain is the 13th check. So sorry, I am getting confused.
Okay, well, wait a minute. This is in green, that is in green.
Yes, and it's CN.
That's CN, but
yes,
CN is
CN doesn't have a 13th check.
But we're not working on CN now, we're working on ZM at the top.
But ZM doesn't have a company car.
Yeah.
Where?
I never said he had a company car.
I say company car.
No, it's another calculation, Cara.
That's what I'm thinking.
Do you think I have space? I even left open a line. I'm gonna color code it for you.
Please do.
Every time I do a calculation, I don't have the space like you guys have to do the calc.
That company card. Does it have to be there?
Yes, just delete company car for now. Because you're not.
I'm not going to delete company car. I'm going to call this calculation 1.
Okay.
And then I will call this calculation ZM. Better. Oh, sorry, no. See, now you're messing up my cal. Now, because I am compulsive, what's that word? Obsessive compulsive, no? I have now taken my highlighter, messed on my paper, and now I have to start again. Please never do that, okay? Prettifying is not important, because I'm just joking. Okay, so then we see that his yearly remuneration. Okay, so let me. I'm actually going to make it easier for you. I'm going to say that this is his pay as you earn remuneration. Okay, that's what that column is for. It's for pay as you earn remuneration. This column here will be for periods. Okay, so if he gets a 13 check, there will be 13 pay periods in the year. If he doesn't get one, you're going to multiply it by 12. Okay, then here is his, let's call it his yearly tax. Okay, but let's call it his provisional. It's really his provisional. So this is his provisional YT. I'm just going to call it YT, Y tax. Okay, because I don't want to mess up everything. Okay, so that is what we have there. Okay, now we can actually go and we can do this for all of them before we even do anything else. I mean, hey, it's my table. I can do what I want. So now I'm going to say that this is now the calculation for the other guys. So this is the calculation for Sheldonell, and this is the calculation for Uncle Martin, And this is the calculation for, what was this guy with the S? I don't know.
You changed.
It was the woman, it was Shirley.
Shirley.
Yeah, for Shirley. Okay. And this was the calculation for Anton Barnard. Won't forget him. And this is then the calculation for little Francois. And this is the one for Gerard Veldhagen. Okay. Now we must make this personal. Can't just be numbers now. We must treat them as friends. Okay, so now for this guy, remember we're using what the column that we calculated, the pay as you earn remuneration, is the 69. Now I hope that the others will now actually, yeah, it will. Okay, so I can just put in those amounts again. Now, in the case of MM, once again, the pay periods, I don't need to have that now, is 13, but in everybody else's case, it is 12. Okay. Okay. And then, of course, it is simply this times this. And so the provisional yearly tax in each case is those amounts. Okay. Now, we are going to look at where these guys fit in at the tax table. Okay, so tax table percentage, I'm going to call it. Okay. So now you have the tax table here. This thing. It says to you that if you earn between R1 and 205,900 Rand, you pay 18% tax. So when we look at 199,000, it is less than 205,900. So it is 18%. Okay. When we look at 830,935, it is somewhere between 744,000 and 1.5 million.
41%.
Okay, so that is 41%. That's where it fits in on the tax table. Okay. When we look at the guy that earns 527, 527 is between 445 and 584, so it is 36%. Okay. Then if we look at 566, it is also in the 36%. Okay. If we look at 261,000, 261 is in the 26% tax bracket. When we look at 128, it's obviously less than 199, so it is 18% and it is 18%. And then as I put that in, you say to me, no!
Because he's on.
Because these two guys are part-timers. And the moment you have a part-timer, you ignore the tax table because part-timers are always taxed at 25%. Okay. No, you're not a part-timer, you're a contractor. Don't confuse yourself, Carl. Okay, don't have to whisper. You did not steal from SARS. It's okay. Okay, breathe. Okay. Cara was now thinking about the huge amount that she's owing SARS.
Wage, they're not being paid minimum wage and they're not being employed, and then they don't pay tax. You don't pay tax. No, you do.
Part-timers pay tax. Okay. So that's.
Yeah, but why is
It's set. It's set. Why are these amounts what they are? SARS decides.
So it's a constant
unless SARS decides otherwise.
So these poor children are getting taxed.
Just remember, they're not part-timers.
No, I mean like.
They are people on a learnership, something different. Okay.
They don't get taxed. No, the company doesn't, never mind.
Okay, Cara, don't worry about it. Okay, that's not part of the question. Okay, so now we've identified their place in the tax table. The next thing we want to identify now is what is the threshold amount? Okay, wait. Before we look at the threshold amount, let's look at the fixed portion. There's now a fixed portion of tax that they have to pay. What is it?
You know, we actually calculated a medical aid and it was already given.
We didn't calculate it. I took it from the table and put it in there. The only thing we calculated was the pension fund, which was 8%.
Okay.
Okay.
She is gonna get 85%.
Welcome. Okay, so the fixed portion. Do you see there that they say there is a in the case of 18%, there is no fixed portion. In the case of somebody that earns 41%, now there is a fixed portion, and that fixed portion is 218,139. That's the fixed portion there. Because they say you pay that plus an amount of 20% of the amount above certain something. Okay, so that 218 portion is the fixed portion that somebody that earns 41, that's in the 41% tax bracket is paying. Okay, the next two
He
are
doesn't pay any more than that.
no. He pays more than that.
So it's that plus the 49.
So that is the minimum for somebody in that tax bracket. Okay, so now we see, okay, what about people in the 36% tax bracket? Well, they pay 105,429 from the start. That's the minimum you will pay if you are in that tax bracket. Okay, so wonderful. That guy is also in that tax bracket, so we don't have to worry. Okay. Now, we sit with a 26%. Somebody that's in the 26% tax bracket will pay a minimum of 37,062. Okay, that was given. Okay, that's the minimum. So, in the case of the guys who are part-timers, this does not apply. Don't have to do the calculation. These guys pay 25% tax. That's just the way it works. No other calculation is required. Also, no rebates, nothing for part-timers. Why? Because now, it's actually an interesting thing. I always say to you that in the real world where you guys live, always going to live next year, now in learnership, not real world. In the real world that you are going to live next year, you must begin to find ways where you have multiple income streams. It's the way of the future. Okay. You must decide. So say you earn 25,000 from 4 employers. You must decide to SARS which one of those guys is your permanent employer. On that permanent employer, all the calculations are done. On the guys that you then say part-time, they're simply going to take 25%. Yes. Okay, so please just note that. Okay, so that's the fixed portion. Now we talk about the ceiling. Okay. Each one of these tax bracket has a ceiling, or maybe not a ceiling. Maybe I should call it the floor. Okay, and that is that amount that they say to you of the income above 205. Okay, so in the case of somebody that earns 18%, there is no floor. Okay, you pay 18%. Now, but in the case of somebody that earns 41%, it says the floor, the base amount that you are going to pay is on the amount above 744,800. You see where I get that amount now?
From the table.
Okay, from the table, once again. For the guys at 36%, that floor income is, what's it, 36, is 455,100. Okay, and you'll see now why I do it this way. It's just to make the calculations simpler. Okay.
Yes, no, it's.
Equals that. It's the same one. For guy that's earning 26%, that floor amount is 205,900. And once again, it does not apply to the part-timers. Okay, so now we can calculate the, we had the fixed portion. If something is not fixed, it is
Broken.
no, man. It is, let's call it the moving portion. It's a moving portion. Or the variable, sorry man, it's the variable part. Variable tax. Okay, so you have your fixed portion and now your variable tax. Now, what do they say to you on your variable tax? They say you are going to pay, in the case of these people, 41% of the amount above this. So in the case of the 18%, it doesn't matter. Okay, he only has a variable tax portion. It is equal to his provisional tax. This is a, sorry, can I just go back here? Let's not call this provisional tax. This is his total remuneration, really. That's total remuneration. Okay, that's a better way of looking at it. Okay, now his variable tax is equal to his total remuneration times the 18%. That's his variable tax portion. But for this guy, okay, that is earning in the 41% tax bracket, he is paying 41% on the amount above 477. So we take that part minus the 477, and so his variable tax is 35,315. The fact that these two amounts are close to each other, you don't have to worry, because this is the amount. This is 41% of the difference between what he actually earned and the floor amount or the base amount.
So what's the point of the fixed portion?
This is not his total tax. His total tax will be those two together.
So I must wait.
Must wait. Okay. So in the case of this guy now, the variable tax portion is 26,000 because he's paying 36% on the amount above 455.
So it's 455 minus the 527. That's all.
So it is no, this is the minus. So it is the total that he got minus the basic amount multiplied by the 14%, 41% or whatever, or 26 or 38 or whatever. Okay. Okay. Now we can have his total tax. And his total tax is now simply his fixed portion plus his variable portion. Okay. And for these two guys, we are simply going to say, well, we can actually give them a fixed portion or variable portion. Their variable portion will simply be 25% of that. So they do have a variable portion. They only have variable portions. Okay. And their total will be their variable. Okay.
So a guy who's earning 128,000 gets taxed 32,000 rand.
Yes.
It's a no wonder people aren't voting anymore.
But he is a part-timer. The assumption is that he is full-time somewhere else. It's an assumption. Now, of course, now listen, guys. If you are only a part-timer, the company is going to deduct this amount on a monthly basis from you. But at the end of the period, you will go to SARS and say, I paid 25,000, 25%. I actually had no other income. I should have paid in nominal terms, maybe only 5%. And then SARS will give you a rebate. That is why it is important to register for tax in the beginning. SARS is very clever. They say to you, register for tax. Because in the beginning years, we're going to give you a lot of money back. So that at the end, we're going to tax you blind. It's a good way of thinking about it. Okay, so now we've calculated the total tax payable for the year. But there are rebates. Okay, so now I say minus the rebates. Now let's quickly go and look again at the age of these people. This guy is 42, only primary rebate. This guy is 65. Somebody with a figure that is 65 years old is going to get the primary and the secondary rebate. Okay. Somebody that is over 75 is going to get the primary, a secondary, and a tertiary rebate. There's nobody like this in this company. So now we can say that this is equal, the minus the rebates, to that amount minus the rebate that was given here as the primary rebate of 14958. Okay. But in the case of the next two people, they get another rebate. So it is that amount minus the 14958 minus the 8199, because they get the secondary rebates as well. So it is equal to that minus the 14958 minus the 8199. Okay. In the case of the other guys, only the primary rebate again. That minus the 14958. I'm going to explain. Do you understand what the primary rebate is about? Yeah. The primary rebate is about actually the following. You do not get taxed on the first 78,000 rand that you earn. But instead of saying to you, you don't get taxed, they say, we do tax you and then we give you the rebate. Just another way of doing it. Okay, so this is then equal to 51,000 minus the 14958. Okay, and in the case of these guys, the rebates do not apply. Okay, they don't get the rebates. So if you are a taxpayer that is a part-time employee, you do not get the rebate. So let me, just for the sake of sanity, put in something. No, you don't get that rebate. Tough for you. So now we can look at your monthly pay as you earn. Okay, and the monthly pay as you earn will now simply be this amount divided by 12. But even as I say that, this is actually a provisional monthly. No, right. Yeah, it is. I'm going to tell you why now. This is a provisional. monthly pay as you earn.
So when we did, I mean, if we did this in the exam, they want to see this whole.
They want to see these calculations. The reason I'm doing it for you in a table like this is
Table, but we still need
to do all these calculations. Okay, so now the provisional pay as you earn in all cases will be that amount divided by 12. But now,
You added 2%.
no. Now there's a deduction again. So minus the medical, what do they call it again? Medical rebates. This is now the thing that comes in here. So here they now say to you, look at that now, here you must be careful, because if you mess this up, this is where people mess up the calculation in the last step. It says to you that Mr. ZM has got no dependents, but he is a member of the medical aid. They say the first member of the medical aid can get a rebate given there of 319 Rand.
But only the first now.
The first member gets a rebate of 390 Rand. If you have three dependents, it's 4 people. It's you and 2 others. What they say there for you is they say to you that the first 2 people, you and your primary dependent, get 319 times 2. Plus the next dependents, depending on how many they are. And in this case, there's another 2, gets 215 times 2. Oh, I must put an equal sign or else it's not going to help. Okay. So now this is good news now, because these are rebates that you can get it. The next guy, Martin, Uncle Martin only has his wife, Auntie Sally. It's only the 2 of them. So in their case, the rebate is equal to 319 times 2. Okay. Then we have the next guy here, ST. Okay. The lady, Shirley Thomas. Okay. She has 4 dependents. That means 5 people on the medical aid. It means that it is equal to 319 times 2 as always, plus 215 times 3. That is what she can claim back on a month-to-month basis, 1283. In the case of Anton Barnard, it is 2 per dependent, so it's himself and 2 others. It is 3. It is equal to 319 times 2 again, plus the 215 for the other dependent. The other guys, the 2 part-timers, once again, they are not members of the medical aid. And then you now get your pay as you earn payable. And it will now be just the difference between these 2 amounts, this minus the medical rebates. And we put it in here. I told you it's long. Even so, now we can go and we can take these amounts that we've just calculated, we can copy it and we put it in here in the medical aid due. Okay, and of course, then we must add them up. Okay, now we are almost done. Yeah, almost. No. And this is what happens now. Now we must say, what is the amount that must reflect on the EMP 201? Okay. So on the EMP 201, it will be 1% of this SDL. So we're going to say that is equal to that amount times 0.01. Okay. That is the skills development levy that the company must pay. The company must also pay UIF 1% by themselves and 1% for the employee. So multiply that with 0.02, 1678, and it must pay this full pay as you earn amount. So the full amount that is due to SARS at the end of the month is the 2147 plus the 1677 plus the 448, and that is the amount we are paying over to SARS.
Thank you for watching this video to the end. If you found it valuable, please subscribe and like. Thank you.